Good afternoon, everyone. My name is Ram Dhamija. Welcome to my channel. Today is 16th of October. It's Thursday, and it has been a very good day for the markets. The markets started off on a slightly positive note, but they have just been building on strength the whole day. And as we speak, Nifty has crossed 25,600, which is quite a remarkable number. Quite many people were thinking whether this rally is going to sustain or not, but here is the answer that it has actually crossed 25,500 with ease, and at 25,600 now we are just a small distance away from the all-time high at 26,200. Today Bank Nifty touched almost the all-time high, or I think it's even broken it, I'm not sure, but it's pretty much there. And that is what I had also maintained earlier, that Bank Nifty, once it starts to move up, there's no resistance. The level will all-time high will be easily breached. Nifty, there were a couple of resistances in between, which we have seen for the last 1 or 2 days, some consolidation, but otherwise it is a clear uptrend that Nifty has been in. So it's been a good day, a good market, and a lot of sectors which were not doing so well, like FMCG, autos, etc., have started to do well today. They are the heroes of today's market. The broader markets are not so participative, so to say. So this is being led by large caps. This is being led by conservative sectors, consumption-led sectors. But no complaints. Nifty is doing really well at this point in time, and Bank Nifty is even doing perhaps better, I would say. And I had been maintaining all throughout all these days that all these are good opportunities for you to buy into. Whenever you get an opportunity to construct your portfolio, you should, because whenever the markets go up, you will not be able to buy it, and that is what exactly happens whenever the bull market starts. Then people regret that, oh, why didn't I buy it during correction, why didn't I buy it during bear markets? And I'd been maintaining for a long time that please use the correction, the time correction. It's a beautiful opportunity to make your portfolio. Still, I would say it's a good time to build your portfolio, because it's been 1 year, 1-2 months of time correction. Plus, during this phase, a lot of earnings have gone up. Our currency has depreciated. So you're getting a market which is 20% cheaper than what it was same time last year. So, one should take advantage of that and construct their portfolios. And that is what I have been maintaining to all my friends, family, clients. So I have a clients group as well. So I wrote over there as well that, you should be buying, you should be using all the opportunities. And over there, I keep on hand-holding people and, advising them that whenever the time is right, you should look at continuing your SIP or add some lump sum to your SIPs whenever the market dips, and so on and so forth. So a lot of people have benefited because of that. And just in case anyone is interested to build their own mutual fund portfolio or join my group, they can fill up the Google form in the description below, and I shall get in touch with you, and we will look at how to construct your portfolio. Or if you want any help in your existing portfolio, you want to make some changes, then also you can get in touch with me, and I shall help you. It's free of cost. And I'm a professional mutual fund distributor as well, advisor as well. So I help people in that aspect as well. Let's begin today's video with the market, and I'll take you through. There's lots to discuss. Silver has fallen, that is another thing to discuss. So I'll discuss all these things. Let's begin our today's video with the Nifty chart, 3-minute chart. So look at this. This is the Nifty 3-minute chart. It's opened at about 25,400, and from there it has just been one-way strength in the market, and we made a high of 25,624, and now we are at somewhere around 25,600 with some time to go to the close of markets. This is the most important chart. This is the Nifty daily chart. I had been maintaining this was the first resistance. You can see on this resistance the Nifty stopped, how it stopped for 4 days, 1 2 3 4. So 25,180, 60, 80 odd was the band, and the Nifty took a 3-4 days pause there, and now it is breaking out. Perhaps it'll consolidate in this particular range for 1 or 2 days more, maybe 25,600, 700 to digest the gains. And after that, what is the next level? The next level is 26,200, this blue line that you're seeing. So this will be the ultimate one. I have got no doubt in my mind that that is also going to get cleared, because it's a higher high, higher low pattern. You can see over here, the first higher high was 25,100, then it was 25,400, then it is 25,600. So Nifty is making a higher high pattern. It's very clear. This fall that came was a blessing in disguise for buying. This was the H1B and the pharma news. and anyone who bought over here will be very, very happy. On all the client group, etc., I had mentioned that this is a good level to buy, and people who bought it are very, very happy. So now let us see, it's just a matter of, I think, time before we take out the new highs, and there is a reason for that. The reason for that is that you look at any asset class, you look at any world market, all of them are making a new high, whereas our markets have been struggling for last 14-15 months. It typically doesn't happen like that. So whenever there's a gush of liquidity, Fed is cutting rates, RBI has been cutting rates, there's been liquidity that's been infused into the system, everything is fine. Our earnings have been slightly mild, our PE ratios were slightly high, and that is why we have been seeing time correction coming in. But now all that is behind us, so there is no reason why we should not participate when the entire global setup is running. You look at US all-time high, you look at China, it has gone up by 100% last 1 year. You look at Europe, it's gone at an all-time high. Look at crypto, all-time high. Gold, all-time high. Silver, all-time high. Emerging markets, all-time high. Everything is all-time high, right? So why should we be left behind? So you are going to see a rally over here also. We're already seeing that. Bank Nifty, as I had said, that this is going to break all-time high, and we are almost at the all-time high now. 57,600 was the all-time high. I think we are close to that only, that level only, 57,300-400. So I would count that as all-time high. This is a very interesting chart. If you see, this basically shows where the markets are from their 52-week high level. This is not the all-time high, mind you, but 52-week high level. So anything that's less than 1% is basically 52-week high, because the intraday variations cause that much. You look at Nifty, Bank Nifty, Nifty 500, PSU Bank, Metal, Mid Cap, all are at their 52 weeks high. So in the last 52 weeks, of course, we had the correction in April and so on and so forth, but we are back to 52 weeks high. It's just a matter of time before we break the all-time highs, which perhaps happened not 52, but they would have happened about 60 weeks before. So and then if you look at the sectors which have not been doing well, FMCG, which has caught up today, now suddenly momentum is only 16% down. It used to be 20% down. Alpha is still 20, and IT, which used to be 25, 26, is down 23. So everything is started to go up, and as you can see, we are not very, a lot of the sectors are actually making their 52-week highs now. What actually moved up the market today? So if you look at FMCG, it was up 2%, autos 1.2, financial services 1, banking did well at 1%, MNCs is up. So basically everything is up. There's no sector which is down, and the ones that have least participated are IT and pharma. If you look at how the FMCG has been, so if you look at the gainers today, Nestle is leading the pack with 4.58% gain, Varun Beverages 3, Colgate 2, Tata Consumers 3, and if we look at the Nifty Financial Services, also is making a new all-time high, and we have done really well in this particular one. So if you look at the returns over the last 1 month, it's been 3%, last 3 months has been flat, but last 6 months and last 1 year has been 14 to 15%, so which is great. So financial services has been the one that has been holding this market up, and if you look at the top gaining sectors, Kotak Mahindra Bank, Axis Bank, HDFC Bank, all were up 1 to 2% up, so which is great news. This is a very, very important chart, and perhaps this is the single most important chart why our markets have started to rally a bit and why gold and silver have cooled down. This is the currency chart. Now something happened yesterday. When the currency really appreciated immediately. We were trading at 88.8. From there you can see this sharp drop at 88.1. so something has happened, someone has done the intervention, maybe RBI, I don't know who has done the intervention, and from there hugely our currency has appreciated by 1 rupee. Now people might argue that what is this 1 rupee? 1 rupee doesn't make a difference. If anyone has traded currency ever, they will know 1 rupee movement in 1 day is huge. It is equivalent to 5-6% move on Nifty. It's of that magnitude, because over there the ticks that happen are in 0.05, 0.1 and so on and so forth, and that also, they don't happen for many days. So 1 rupee movement is very, very high. What is the significance of this move is 2-3 things. One is that the gold and silver prices have cooled off completely. So I'll show you how ETF prices in India have crashed, because gold and silver prices are determined in US dollars. Now if US dollar suddenly becomes less expensive for us, that basically means gold and silver become less expensive for us. So suddenly you have seen that although gold and silver prices are at their all-time high in US dollars, they have crashed. At least silver prices in ETFs have crashed in the last 1 day. What is the other implication is that the FII inflow will start over here, because once the currency starts to appreciate, then FIIs see that there is value. They will take out lesser money from Indian markets because the currency is supporting them. So all in all, it is indicating a good thing for the markets, and a cool off in the bullion markets, which was very important for this rally to continue. I'll talk about it more over the weekend in detail, but sufficient to say that this is a very good sign that the currency is appreciated a bit, and that's one of the major reasons why our markets are rejoicing of it. Now let us look at the international cues, how the international cues are stacked up. So everything is fine. Nasdaq was up yesterday, Nasdaq futures are up today, dollar index is very well behaved, Brent oil is at 62, there is nothing to worry. Our currency is 87.7, it was 88.7 some days back. So that's great. Gold is an all-time high at 4250, but in INR it has stabilized, as I have said. Another interesting thing to see is that silver spot and silver futures, the gap has reduced. So silver, this is this last symbol that you're seeing, XAG by USD, this is the silver spot rate at 52.87, and silver over here, this is the futures rate at 51.92. So the gap is less than $1 now. The gap had gone to as high as $3, which was basically meaning that the spot was available at a higher price than futures, which typically never happens. That's called backwardation, and that basically shows that the system is under stress and people want immediate deliveries. So these rates are determined in COMEX and LBMA outside India, in London and US, and the stress was developing from there, but now the stress has eased out a bit, quite a bit, even though silver is at all-time high in international markets. But let me show you what has happened in India. These are the ETF prices. Nippon silver 6.5% down, HDFC 7 down, SBI 7 down. So all these silver ETFs have crashed today, and that is because there was a froth that was building up in these ETFs that has got cleared now. And the second thing that has happened is that our currency is strengthened. So the bullion, which is, as I have explained already, which is determined in USD, has kind of eased out a bit. So that's good news for us. So that is that about the market. A good day, great day. Not too much premium left now for 2 days. My expiry is on Monday, so not too much premium left also in the markets. But otherwise, it's been a fantastic day for the markets, and people are rejoicing. Their portfolios will be smiling today, provided you have made it the right way. And this is what happens, when the market starts to go up, then they don't stop, and that is what we have been seeing in markets like US and Europe and even China, for that matter. The way they have been going up since April, there's just no stopping them. So let us hope that our markets also start doing well. Though I'm not a very big proponent of immediately markets going up and going to irrational exuberance, because that creates their own problems. But yes, we are definitely due for some rally, because we have done a big amount of time correction, and people who have been disciplined during this time in making their portfolios in a good way, doing systematic investments through mutual fund SIPs and so on, they will be rewarded handsomely over the last 1 year. So I just hope that you have been also doing the same, and not speculating too much, and maintaining it in a disciplined way, maintaining asset allocation. If you've been doing that, then you will be sufficiently rewarded. So that's it from me now. If you like my video, please do subscribe to the channel. Please like, share and comment. And in case you want to build your mutual fund portfolio, please fill the Google form and I shall get in touch with you. So that's it from me now. Take care. Bye bye.